Now, this is going to be the first activity here that we're going to give everyone to do after this video clip is over. And this is an extremely important exercise, I think, for everyone to do. One of the biggest mistakes that we see people make on a regular basis with tax lien investing is they become confused by all of the different strategies or all of the different ways that a person could become involved with tax lien investing. Some people get involved with tax lien investing because they hear this coined phrase, pick up properties or acquire properties for pennies on the dollar. Well, is that possible? It is possible, although it takes a specific investment strategy in order to maximize the potential for something like that happening. However, that's not what tax liens and deeds are really all about. As I just mentioned a minute ago, for those that are interested in just straight property acquisition, well, there are a number of incredibly simple, easy-to-use systems for tax deed investing that will enable you to own a property outright, free and clear. So they work for people that are interested in property acquisition. Also, though, and the majority of the tax liens out there simply pay out a high rate of return on a very safe or secured investment. So for a lot of individuals that get involved with tax lien investing, they're interested in one thing, and that is that they're tired of making a 4% rate of return on their retirement accounts, or they're tired of making such low returns consistently. And the idea of being able to make an 18% rate of return on an investment that is all but guaranteed, it's an exciting proposition for them, and it's a safe investment. So this is an important aspect of how you're going to get started here, and this is an assessing your resources section. Now, when we talk about resources, we're talking about resources that you have that you can dedicate to your tax lien investment strategy. Now, the first one here is time. Really, which investment strategy you're going to pursue has a lot to do with your answers to a few of these questions. For instance, time-wise, how much time can you dedicate on a weekly basis to tax lien or deed investing? Now think about this. There are no right or wrong answers here. The idea behind this is to custom form an investment strategy that works for you based on what you can give and based on what your objectives are. Now the resources that we're talking about they fall into the following categories here. Number one is time, which we just mentioned. How much time can you spend a week, researching properties or working actively to purchase tax liens or deeds? The second one is money. Now, I don't want anyone to get the wrong idea. The first tax lien that I purchased was for $65. It's a great way to get your feet wet. You don't have to spend a lot of money to get involved with tax liens. However, the amount of money that you have to work with your tax lien investing can open up doors that may not be available to other individuals. So the money that you want to invest in tax liens does have a lot to do with which strategies you should pursue. The third one is your willingness or ability to travel. Is traveling to invest in tax deed properties, is that something that you're open to? And the reason why that is one of the questions here with resources is that while lots and lots of counties every year are adding their own county websites to the rest of the county websites out there in the country, there are still a lot of states that still require you to be on location for the actual sale in order to purchase or acquire a property. So if you're willing to travel, it opens up more doors. If traveling is not something you want to do, like I said, there is no wrong answer there. It's just something that will change the type of investment strategy that you should utilize. And the fourth one here is probably the most important one, and this is your investment objective. Your investment objective could be classified as what you're looking for in a tax lien investment. In other words, are you looking for a high rate of return? Are you looking for the ability to acquire property? You have to determine what your primary motivation is for investing or for getting started as a tax lien investor. If it is to make a high rate of return on a safe investment, then there is a very specific investment strategy that you should follow to do that. If you're interested in acquiring property, that would change the types of properties that you would look at as well. So for each one of these resources, there are a number of different directions that you could go as an investor and still accomplish what your objectives are. Now let's take a look at some of the recent headlines that we're seeing on the news because they seem to be all over right now, and it seems to be affecting the public's opinion about different types of investments. So let's take a look at what we've heard about the real estate market recently. Here it is: home prices, no relief on horizon. We hear about companies like Countrywide, which are these enormous lenders having difficulties and being required to lend money. There are all these things about the real estate market that would tell your average Joe that now is the time to stay away from any type of real estate investment. However, the people that make it rich with most of the investments are the people that run into the fire while everyone else is running out. They're the ones that have the inside clues and the inside hints. And the fact of the matter is that the real estate market is important, but it's not as important as you might think to the tax lien market. Here's another article about record drop in pending home sales. There's all these homes on the market. Well, people think, well, how is that going to affect the investment? And I get a lot of students that are wondering about some of these areas. Well, what about this area? I mean, I've heard that they have lost 10% of their property's value in the last couple of years. Well, that's true. That could be absolutely true. However, keep this in mind. The starter home market is always a market that is just flourishing because there are always going to be people that need a good starter home. There's always going to be people that are looking for home within a certain budget range. So again, this is not something that you need to be concerned about with tax liens at all. And besides that, as far as selling prices on properties and having more properties on the market, imagine what the possibilities could be if you were to acquire that property for 30% of the market value. Well, suddenly at that point, what the market's doing really isn't that important because you purchased it for such a low amount, and you know at some point that the market's going to pick up again. So, with all of these things here that we're looking at, the most important thing for you to realize is that tax liens are not negatively affected by fluctuations in the stock market, economic recession, falling home prices, or any other occurrence. The most important thing you can take from that is that tax liens, if they're affected in any way, it's actually in a positive way, meaning that if people are struggling to pay many other bills, then it's very possible or likely that one of those bills that they're struggling with is their, I guess it could be their tax lien bills. Now, I'm sorry, their property tax bills. Now, that doesn't necessarily mean that if they're having troubles right now paying their property taxes, that you're going to see a huge influx of tax liens on the market. But is that possible? Absolutely. Absolutely. Like I said, the bottom line with why tax liens are not affected by these things in the market is because you're not looking at picking up a property for 70% or 80% of what its market value is, like you might if you were looking at a rehab project. You're looking to pick up properties for 25, 30% of their market value and then selling them. And so when you're able to purchase at that type of a discounted price under what the market value is, It doesn't matter what the home prices are doing, because there's no doubt that you can beat the best deals out there and you can still walk away with a lot of great money. We are actually going to conclude this this next slide session set for session 3 of the training, to try to keep these down to a smaller length for those of you who do not have enough time. So again, I'm Shade Foray with Tax Lien Investor Secrets, and please log into our next training session, which will be training session 3. Thank you so much.